Search crypto crash on YouTube this week and all you see is red thumbnails screaming market correction, crash coming, how low will it go? While Bitcoin wicked to the high 88s, silver pushed into fresh highs and Solana plus the high beta stuff took another slap. The real question is not crash or not, it's who was buying into the dip, what Davos was quietly saying about crypto, and whether this looks like the end of the move or just another mid-cycle shakeout. Quick snapshot first. What actually happened on price this week? Bitcoin spent most of the week hovering around that 90k region. Then on the Greenland tariff headlines, you got that 3 or 4% flush into the high 88s. And by the weekend, it clawed back into that 89 to 90 range. Ethereum had the jitters but stayed soft under 3.2 thousand. And Solana was one of the weaker big caps again, with a double-digit loss across the week. And a lot of L1s, L2s and other sectors followed that same tune. As for the total crypto market cap, it's still roughly between that 3.1 to 3.2 trillion zone. And yeah, we stepped down from last week, but it's more like a hit and a reset than some full collapse. Sentiment also swung back into fear. The Bitcoin Fear and Greed Index gauges spent most of the week in the high 20s. People are nervous, but it's nowhere near the panic extremes we've seen in proper tops and bottoms. Now, why did that wick even happen? And why did everything and everyone suddenly care about Greenland of all places? So you had Trump doing Trump things, threatening tariffs on a bunch of European countries over Greenland, European leaders talking about the moves as fundamentally unacceptable, and global markets flipping back into that sell America and hiding gold and silver mindset. At the same time gold and silver rip through fresh highs, everyone on social media suddenly becomes a Mel's Maxi, and you get those posts saying there is no second best, crypto is finished. But here's the bit that matters though. This isn't the first time tariffs were supposed to end the cycle. Oz posted this tweet last April, same Bitcoin to VIX trendline, different headlines every time. Deflation scare, the COVID crash, Asia crash, now tariffs. Each time the narrative sounds original, each time the chart just tags the green line and just carries on. So my view on this week's Greenland drama is simple. It's a bit of noise wrapped around some macro backdrop, credit still looks calm. Zoom out and you see the global macro picture isn't in crisis mode. And Bitcoin is just reacting to emotion more than new information. And if you want a slow walk through the timing framework and why we care about this Bitcoin versus VIX chart at all, click the card on the screen now. It's a tariff video we put back out in April last year when everyone lost their minds the first time it happened. So watch that one. After you watch this, if you missed it, it will make this week's headlines feel a lot less dramatic. In the first wave, crypto just traded like any other risk asset. Bitcoin and Ethereum down a few percent with US equity futures, and about 200 billion wiped off total market cap in a blink of an eye. But you know what? Flow data told us a very different story once the dust had settled. Latest figures show over $2 billion going into crypto products this week, most of that into Bitcoin, a good slice into ETH. So while social was arguing over the dip, bigger money was quietly adding exposure. And you put that all together with calm on-chain behavior, no big minor panic, no long-term holder capitulation, and to me it looks far more like leverage getting washed out in thin tape than some top is in moment. And to be honest, that makes me a bit curious of where you are mentally though. Are you more worried about tariffs and headlines, or about missing the next leg up if this really is just another noisy mid-cycle wobble? Drop it in the comments and tell me which camp you're sitting in right now. And while charts weren't doing all of that, Davos was giving us a very different signal about where the market is heading. On the payment side, you had the full panel on stablecoins as serious plumbing for cross-border settlements, talking about regulated dollar tokens, bank rate oversight, and how to bring these into mainstream finance without killing the innovation. Then you had that tokenization theme everywhere. Panels literally titled "Is tokenization the future?" and pieces pointing out that tokenized treasuries, funds and even real estate are one of the main crypto trends right now, not some sideshow. Forbes even did a roundup on the top Davos announcements in AI and digital assets. And crypto's slot was not meme coins, it was stable coins, tokenization, real world assets and robots running on top of programmable money. So yeah, price was noisy, but in the rooms that actually move capital, crypto is being discussed as part of the core financial stack. On top of that, Brad Garlinghouse was out there saying he thinks this could be one of the most bullish periods yet for the space. Talking about crypto pushing to new highs, more real institutional use and XRP still being underpriced relative to what banks and payment firms are already using it for. So whether you're an XRP fanboy or not, the bigger point is that at Davos, you now have the chief executive talking about crypto as standard infrastructure, not as a speculative toy they all have to apologize for. And then in the background you have BitGo pressing ahead with a public listing around $2 billion mark, a pure crypto custody and infrastructure play and going to public markets in the same year everyone claims the space is completely dead. So you put Davos, stablecoins, tokenization, Brad's comments and BitGo together with the flows we just looked at, and the story you get is capital hunting for a home in a messy macro world. Crypto slowly moving up the list of serious options even while YouTube thumbnails are screaming crash. Now, let us talk about alts for a minute, because this is where most of the pain showed up on the screens. As I mentioned earlier, Solana took one of the heaviest hits out on the large market caps, double digits drawdown across the week, and that dragged a lot of higher beta plays with it. Sector wise, it wasn't fun, but GameFi, DePIN and NFT heavy names were again some of the weakest bits of the board, down mid to high single digits. Some even worse, those areas are still working through too much supply and too many weak projects. In other words, too much shit. As we covered in recent weeks as well, privacy coins have been doing better than the others recently, and more serious infrastructure names held up relatively better, but most of the major ones took a hit like Monero and Zcash. Now, privacy coins doing a bit better recently does make sense when everybody's suddenly talking about tariffs, capital controls and where money can move if politics goes sideways. My approach here hasn't changed. It stays boring. No need to be a hero in weeks like this. Just track the projects correcting in an orderly way without breaking their bigger picture trend, and you let the weaker narratives bleed without trying to scalp every single bounce. Now, serious stuff aside, let's look at how CT and Reddit process order this, because the memes told their own story. On X, you had people joking that Greenland was about to become US territory, Trump planting a flag, everyone dumping dollars and sprinkling it to gold. And plenty of there is no second best, just hodl gold and chill style posts. Others took it a bit more seriously, threads pointing out that as soon as the tariff headlines hit, gold and silver surged to new highs while Bitcoin traded like a tech stock. And some openly saying they were hedging with metals because crypto had just lost its safe haven shine for a bit. You also had posts trying to tie it all together. Japan's debt worries, Greenland drama, Macron pushing back on tariffs in Davos, and Bitcoin dipping to a 90k while people asked if this is the final shakeout before everyone realised it's only the real escape hatch. And of course, you got bear comedy, accounts role-playing Trump speeches about taking Greenland for huge minerals, slapping massive tariffs on anyone who complains. Others clowning on metals as most profitable headline pump and dump of the year once the tariff language softened. And this one, where someone was pointing out the simple version. 10% tariffs on the EU until we get Greenland, and Bitcoin answering with a $5,000 drop. Over $200 billion in crypto market cap gone in a blink, and people arguing whether this is a buy the news gif or the start of something bigger. And while the crypto bros on X were swinging between doom and memes, Reddit had its own mood going on. In the Ethereum threads, you saw people venting that gold is basically at 5,000, silver's ripping, and ETH still hasn't cleared its old all-time high. Plus a lot of frustration at influencers constantly calling for crashes instead of actually backing the assets class. Yeah, when you scroll further down, it gets much more honest. People admitting their self-worth is tied to their own crypto net worth. Others saying holding through this chop is tough when everything else is already recovering. And for me, that's a telling combination. Price volatility up, metals grabbing at the spotlight, memes everywhere. But underneath that, you see lower engagement on the serious charts. People getting tired, bored, or quickly hiding in other trades. And that's usually what this stage of the cycle looks like. Tension drops, narratives get noisy, and then the next leg starts and most of the crowd is either underexposed or mentally drained. So after a week of Greenland drama, Davos speeches, metals at highs, CT panic. So the question is, why am I still leaning bullish this cycle instead of joining the this is over crowd? Look, first, that flash move into the high 88s didn't come with miners dumping or long-term holders exiting. It looked like leverage getting wiped out in a thin market and not a proper blow off top. Secondly, you had $2+ billion of inflows into crypto products this week, most of it into Bitcoin, or a solid slice into ETH. And you won't see that if big money crowd is quietly walking away. And third, credit still looks relatively calm. High yield spreads and HYG are not behaving like we're sat on the edge of a real crisis. And when that backdrop is steady, risk assets can take a few hits and still recover. And finally, the fact that gold and silver are already at new highs while Bitcoin is still some distance away from its own tells me the debasement trade is alive and well. Capital's just rotated into metals for a moment while crypto catches its breath. And you piece all of that together and my base case stays simple. It's a bit of chop where headlines and metals steal the spotlight for a bit. But the bigger trend for Bitcoin, Ethereum and altcoins is still up until the actual data flips. And if you want to go into more detail about that particular view and why there's this confidence, including the HYG read, credit spreads and what I'm watching for a genuine risk-off break, click and watch the latest video that we recorded where Oz discussed credit and why we're so confident that this market has massive legs still in it. And let me know in the comments, are you buying this dip, hiding in metals for a bit, or just sitting on your hands waiting for the next clear signal? See you in the next one.